explain so the reasons why people, enter into this market. Okay. So everybody have a reason, okay, that they trade. Okay. Everybody know the reason why they enter into the financial market. And the reason that they bring, okay, their reason makes them a type of participants. Okay. So there are people that are participating in the forex market for different reasons. And there are two types of participants depending on the reason. And the reason can be profit, okay, profit reasons, or we have non-profit reasons. So it's not everybody that is in the financial market for profit. There are some that are not in it for profit. They just want to, do their thing. Okay. All right. So when you're talking about the people with the profit reasons, let's handle that one first. So when you're talking with the people that or the participants that enter for profit reasons, we have the major banks. Okay, we have the major banks. Let me number them so that you can get it. We have the major banks. The major banks. Example of major banks being JP Morgan. These are investment banks. Okay, so you can have JP Morgan, JP Morgan Bank. You can have Chase Bank. Those are big banks. Okay, then you can have um, Goodman Sachs. Okay, so all those people are um, major banks that trade the financial market for profit. So when you go, they have trading floors that you see a lot of traders on the floor shouting and jumping, buying and selling. Okay, and they are in to make money. Then we have the normal banks. Okay, so the normal banks in Ghana, we can have, let's say, GCB, sorry, you can have Barclays, okay, Barclays Bank. All these banks enter into the financial market to make some money. Okay. Then the third one, we have speculators. Okay. So the speculators they are sort of normal companies that are set up just to speculate on prices. Okay. So maybe a company wants to have trading as a sort of an investment, like to help them to meet maybe their financial target. Okay, so they may employ traders to trade on their behalf. They are not banks, they are just companies that they want um, traders to help them, okay, to meet certain targets of theirs. So they have the trading department that enter the market. They take the company's profits and they try to multiply it. Maybe in the whole year, they are looking for 10% to add so that it can, take care of some things, you understand? And they can be with another speculators. Then we have the individuals, that is me and you, okay? Me and you that we are also participating in it for profit reasons to better our lives, okay? And we are called the retail traders, okay? And we are at the bottom of the ladder. So uh, our our uh, our our trading doesn't really move the market. All right. These people, the major banks, and they are the people that move the market. We are just following their lead, then you trade. Okay. So we don't have enough money to move the market. It's they that move the market. So whatever you are coming to learn is just to know when these guys are coming to enter the market or see their signature that they are in the market so that you trade alongside their decision. That is all that you are coming to learn. All right. Then we have the ones that they don't they don't trade for profit. Okay. This is just to control. So the ones that they trade without profit, this is just their reason is for control, and they are the central banks. Okay. So recently, the Ghana city was skyrocketing. Then a minister of finance came and he said that okay, he wants to reduce it. So he started the Bank of Ghana to enter the forex market and trade. You understand? And it was not so they were using the country's money to um steady the price of the city. Okay, so they entered the forex market and they were just dumping money so that it can counteract some of the um drawdowns that the city is making. All right. So that is exactly, they just want control. They want the city to be stabilized, and that is control. Okay. So the Bank of Ghana, and that is central bank by Bank of Ghana, BOG. Okay. Bank of Nigeria. Okay. Bank of Tanzania. Okay. And the Federal Reserves in the US, all of them enter into the market. And they are entering not because they want to make profit, it's just to stabilize their currency. Okay, just to stabilize their currency. So the Bank of Ghana may enter into the market to pump in, to buy or to buy a lot of the dollar or sell a lot of the dollar or whatever, depending on their intention, to be able to curb the depreciation of the cedi. Okay. And if your money gets finished, then you will losing the control. Then the money goes up again until you have another money to come and pour it inside again. All right. And you are not doing it to get money. You are doing it to stabilize your economy. All right. So it's less as you are slaughtering your currency to stabilize it. More of that. All right. So those people enter the market for non-profit reasons. So now this brings me to the concept of brokers. Okay. So you see that I was telling you that there are some traders that enter the market for profit reasons. So, and I said the last one are the retail traders. That is me and you. Okay. So when we enter the market, we want to just trade and better our lives. Okay. Earn some money online. All right. But we are not given the opportunity to enter the market ourselves. That's why I said you need applications. You need a broker app. Why? Because the money first, Forex or what trading was not for the poor or was not for the average. It was for the millionaires and the billionaires. Okay. So when you are entering into one trade, you may need about $100,000 in your account to be able to even place a trade that can give you $10 per movement. Okay. And it was only the rich people with the billionaires that had that amount of money to be able to place trades like that. But or the average person does not have that money. But they wanted to include everybody. So there are some group of people that came. They were business people that came that, okay, we are going to set up an entity. And this entity that we are going to set up, we are going to help the average man to also come and play with the big boys. So we are going to pay 99% of their fees. We are going to give them, we are going to help them, okay, and we are going to give them 99% of the money. Then they will bring 1%. Okay. So when on their account, they will see their 1%, but behind the scenes, we have added the 99% to them. And this is where it gets tricky because first, that is what they were doing. But now they realize that as they keep on funding traders don't have the patience to learn. Okay. So they saw that they were losing a lot of money to the market, to these big banks, JP Chase and JP Morgan, sorry, and Chase Bank and things. So they decided that, okay, now we are going to divide the people into A and B book. Okay, we are going to divide the people into A and B book. Okay, so when you are a trader and you are very good, then they take you to the A book, meaning that now you trade directly into the financial market. But if you're a newbie, they'll put you on a B book. B book is that you are trading with the broker. So the broker like your is like your bank. Okay. So when you place a trade, they will bet against you. So if you click on buy, they are trading sell on you. Okay. So if you make money, it's the broker that will pay you. If you lose the money, the broker will take that money. Okay. It's like you are fighting the person that is funding you because they realize that a lot of people are not able to trade well. So because of that, why would they give all those profit to JPCs? They can also get it. So they created the A and the B book. All right. But without these people too, you cannot enter the market. Okay. So what you have to do is to learn the trading very well so that you always draw money from them to an extent that they put you on the A-book so that you can directly um, trade the financial market. Okay. You can directly trade the financial market. So that is the purpose of a broker. A broker is supposed to help you for you to enter the forex market or to enter if you are selling gold to be able to take you on the exchange for you to be able to buy or sell. And they support you. That is what has given some of us the opportunity to be able to trade the financial market. So you can trade as low as $10. Okay, you can deposit it as low as $10 in Xness and you can place a trade. But at the background, that $10 has become something like $100,000 because they are adding that extra amount of money for you to be able to place a trade that is amounted to about $100,000. And I will explain the concept to you. Okay. So as I said, the brokers they give leverage. Okay. So the leverage is what they give you. So when you go to Xness, okay, I'm using Xness because that's what a lot of people know. So when you go to Xness and let's say you deposit, let's say $10, okay, into the account, you deposit $10 into the account, okay, then you want to take a trade, okay. The trade requires you to have $100,000, okay. The trade requires you to have $100,000, okay. But you have $10. So meaning you need a lot of money, about $999,000, 99.90 something dollars to be able to place that one trade. All right. So what did they do? This Exness gives you that leverage. Leverage means help. Okay, so they help you, they give you the power to be able or the assistance to be able to place that trade, although you have $10. Okay. And sometimes they give you leverage of 1 is to, let's say, 500. You understand it when you start using it. Okay. Then sometimes they give you 1 is to, let's say, 2000. It depends. Okay. So what are they saying? They are saying that if you choose a leverage, so it's you that you choose the leverage that you want. When you go on the app, you can choose the leverage that you want. You can choose the 1 is to 500, 1 is to 2000. It's even one of the first things that you do before you even create a trading account. Okay. So when you choose the 1 is to 500, what are you telling them? You are telling them that they should multiply your $10 by 500. Okay. That is the leverage. And you are going to get 5,000. So now you can place a trade with what? $5,000. Okay. So when you are trading a currency and the currency is trading at, let's say, $1.3, okay, but you have $5,000. So you can place a trade to a maximum of what? $5,000. And that will be your leverage. That will be your margin. Okay. All right. So if you choose the leverage of 1 is to 2000, then you're saying that your $10 should be multiplied by 2000. Okay. And what are you going to get? You are going to get 20,000. So imagine you deposit $100, then you have 200,000. So meaning that if you have 200,000, it means that you can place more trade than someone or higher trades than someone who deposited $10 because that person will be having 20,000 buying power. That is your purchasing power. So for an example, let me explain the leverage to you. For an example, okay, I am going to do a business. Wait, okay, let's say I see, and this is the reason why two people will play the same trade at the same spot, but different, they will come out with different profits or different losses. Okay. One will be bigger than the other. It's because of the leverage. And let me explain it in common terms with you. So, assuming that I want to sell phones, okay, then maybe I go to Circle. Then I found out that, okay, I can buy a phone from Circle at, let's say, or a wholesale shop at Circle at 1,000 Ghana cedis. but that phone on the market sells for 1,500. Okay. Now, because I don't have a lot of money, maybe I may have 10,000 Ghana cedis to be able to start this business. Okay. Or 5,000 Ghana cedis. So when I have 5,000 Ghana cedis, how many phones can I buy? I can buy five phones. Okay. Because that is my purchasing power. All right. So let's assume that, but I've seen that, okay, this phone can sell a bit more phone. Like it has the ability to make me money. Like they buy and check, I will sell it and I will get my money. Then what do I do? I I see the potential, but let's assume you say many will be to say despite, okay, we are trying to, despite also sees the same opportunity. Then what does despite do? Despite always cap everything, he has a lot of money. Okay, so what would despite do? Despite can buy 100,000 of that phone. Okay. So when I sell the phone, my profit is how much? When I sell the phone, my profit is 500 cedis, 500 Ghana on one. So because I bought five, my total profit will be 2,500 cedis. Okay, that will be my total profit. Okay. But despite bought 100,000. Okay, despite bought 100,000 of that piece. So if despite bought 100,000 and and one profit on it is 500 cedis, then despite will have 50 million Ghana cedis. Okay, 1, 2, 3, 1, 2, 3. Yes, 50 million Ghana cedis. So all of us saw the same opportunity. All of us saw the same thing, but because of leverage, okay, despite it's making 50 million Ghana cedis, and I am making 2,500 Ghana cedis because of the leverage that we have, the purchasing power. In trading too, it's like that. Okay. If somebody you will deposit $10, you will not make money like than someone that has deposited $1,000 or $10,000. They have more purchasing power, so they can buy more. Like the way Despite was able to buy more phones, I was able to buy five, but Despite was able to buy 100,000. Okay, it's the same thing. Your money determines the number of um the number of currencies or the number of assets that you can buy. Okay, and assuming that we bought this phone, okay, then it didn't sell. Nobody likes it, it's obsolete. Obi and Pabian. I will lose I will lose my 5,000 Ghana cedis. But despite we is going to lose about 5 million Ghana cedis. So I'm coming, let me do the calculation. So one is 1,000, then 100. Yes, despite is going to lose about um so 1,000 times 100,000. Okay. Yes, so despite is going to lose about no, so this one will give us um yeah, so the profit on it is 50 million. But when he's losing, he would have lost 100 million Ghana cedis because that was what he purchased. Okay. Then he sold it for 150 million Ghana cedis and his profit was 50,000 Ghana cedis or 50 million Ghana cedis. So that means that his loss, if he is losing, will be bigger. I will lose 5,000. Then he is going to lose 100 million Ghana cedis. So the same thing with Forex. Okay, if you are making, depending on your leverage, you can make more or you can lose more, depending on what you are bringing into the market or your amount of what you are purchasing. All right. So I want to go to the normal things that people have been here, which is the forex trading, and explain some things there. Okay, as I said, the forex trading is trading of currencies. Okay, then under the currencies, we have the major currency, then we have the minor currency. Okay, we have the major currency, we have the minor currency. So the major currency are just seven. Okay, so those are the major currencies. Those are the ones that are mainly traded with a lot of volatility. So when you have a lot of volatility, the market moves, is liquid. That means that when you buy, you have somebody that is selling so that you can sell what you have bought for money. But if you have a market that is not liquid, it is not volatile, it means that the buyers and sellers are not the same, like it's different. So sometimes you are in profit and you want to sell. It's just like going to buy something on the market that nobody needs. Like right now, Wakoto face shield for Corona time right now, nobody needs it. So when you buy it, nobody will, like you can't sell it to anybody. All right. So that is an illiquid market. That is a market with low volatility. All right. But you always want to trade a market that when you buy like tomatoes, you buy today, if you buy some and you sell, somebody will buy it, okay, because it's liquid. So on the forex market, you buy things that are moving, okay, so that when you sell it, you can easily, when you buy it and you're selling, it's easy for you to sell. And we have the major ones and we have the minor ones. The major ones are a lot of money flows through that. And you can have as much as $6 trillion flowing through that market, the forex market, just the forex, oh, not the other sectors, the forex, $6 trillion passing through daily. And Charlie, your aim is just to get $100 of that or $1,000 of that to make your life, okay? Mm. And that's why we are all trying to learn these things. All right. So we have the major currencies. So the major currencies that you can trade that are liquid, we have the British pound and the US dollar. Okay. We have there are seven. Okay. We have the euro and the dollar. All right. We have the dollar and the Japanese yen. All right. We have the US dollar and the Canadian dollar. Then we have the US dollar and the Swiss francs. Okay. Then we have the Australian dollar and the US dollar. Okay. Then we have the New Zealand dollar and the US dollar. Okay. And these are the seven major one, two, three, four, five, six, seven. These are the major um currency pairs that when you trade always is liquid. Okay. And the forex market has about 6 trillion passing through it, as I said. So let's look at the minor briefly. So we have the minor, okay, the minor pairs, okay. So yeah, we looked at the major pairs. We have the minor pairs, okay. And the minor pairs, we can have the GBP, the British pound against the Japanese yen, okay. The hybrid of the major pairs, that's all, okay. You can have the euro against the Japanese yen. You can have the British pound, against the euro. Okay. You can have the Australian dollar, AUD, and the euro. You can have the AUD and the British pound. So interrelation, all these are minor pairs. Okay. So these are called exotic pairs. Okay. So they are a little liquid, but they are not like the other ones. All right. So those are the major um those are the two major pairs that we have. So